Imagine you're in a busy marketplace. Some vendors sell just a few items at high prices, while others sell hundreds at lower prices. If you wanted to know the average price people actually paid that day, you couldn't just take the simple average. You will consider how many items were sold at each price. That's exactly what the VWAP does in trading. It shows the true average price of a security weighted by volume, not just by the time. The VWAP is one of the most important tools for professional traders. Unlike a regular moving average, which only looks at price, VWAP also takes into account how much was traded at each price level. That makes it a realistic reflection of where most traders have actually positioned themselves. Here is the basic formula. Don't worry, it's actually very simple. That means if most of the trading happened near a specific price, VWAP will lean towards that level. Think of VWAP as the fair value line for the day. It tells you this is the average price where most of the today's buying and selling has occurred. Now, how do traders use it? There are three main ways. The first one as a trend filter. When price is above the VWAP, buyers are in control. The market is trading at a premium. When price is below VWAP, sellers dominate. It's trading at a discount. If you're a day trader, this is huge. It helps you quickly decide whether to look for longs or shorts. For example, if price keeps bouncing above the VWAP and rejecting it as a support, that's a strong uptrend. But if price stays below the VWAP and struggles to break it, that's a bearish bias. Think of the VWAP as the equator of the trading day. North of it, bulls are winning. South of it, bears are in control. The second as dynamic support and resistance. VWAP often acts like a magnet. Price tends to return after moving too far away, just like gravity pulling it back to balance. Institutional traders like hedge funds and mutual funds actually use VWAP to measure their own performance. They aim to buy below the VWAP and sell above it, because it means they got a better deal than the market's average participant. So, when retail traders see the price below the VWAP, it can sometimes indicate potential discount zones, especially if volume starts increasing. The third one as a reversal or entry signal. VWAP can also signal shifts in control. When price crosses above the VWAP with strong volume, it often marks a bullish reversal. When price breaks below the VWAP, it can mean bearish momentum is taking over. But here is the key detail. Context matters. If the market has been trending up all day and then dips slightly below the VWAP, that doesn't automatically mean a reversal. Instead, smart traders use it with volume confirmation or higher timeframes, VWAPs, to see if the shift has real weight. Let's put it into story. Imagine you're watching Apple stocks. Early in the session, price is hovering right around VWAP. Buyers and sellers are balanced. Suddenly, a strong volume pushes price above the VWAP and it holds there for hours. That's your clue. Institutions are likely accumulating and the trend is healthy. Later in the day, price dips and retests the VWAP, acting as support, and bounces again. That's your signal that buyers are defending the fair value line. The VWAP is especially powerful for intraday traders because it resets at the start of each new session. That means every trading day, the VWAP gives you a fresh fair value baseline. However, many platforms now also include anchored VWAP, a version where you can manually choose the starting point. For example, you can anchor it at a major like a news release, a market low, or a breakout candle to see how price behaves relative to that moment. This allows traders to analyze specific phases of market behavior instead of just one session. Now, let's talk about how to combine VWAP with other tools. A classic setup is VWAP plus the RSI or the VWAP plus the MACD. For example, if price breaks above the VWAP and RSI crosses 50, that's a stronger confirmation that momentum supports the move. Or if MACD turns bullish near VWAP, it reinforces that volume and price are aligned. VWAP also works beautifully with Bollinger Bands. When both show contraction and price is near the VWAP, a big move is often coming. And of course, institutional traders often layer multiple VWAPs daily, weekly, or monthly to identify zones of long-term accumulation or rejection. When all align closely, that level becomes extremely significant. So let's recap the key takeaways. The VWAP, volume weighted average price, a fair value indicator, combines price, volume, giving a realistic picture of where most trading activity occurs. Above the VWAP, a bullish bias. Below the VWAP, a bearish bias. Acts as dynamic support resistance and a mean version point. Used by institutions to evaluate trade quality. Can be combined with the RSI, MACD, or Bollinger Bands for confirmation. So in short, the VWAP helps you trade with the crowd, not against it. It tells you what the real money is buying and selling, not just what the chart looks like. So remember, the VWAP isn't just a line, it's the heartbeat of volume. It reveals where the balance of power lies, where value truly lives, and when momentum shifts from one side of the market to the other.